Have you ever watched price move up and down and wondered, what is the market trying to tell me? Most beginners see random candles. Professional traders see a story. Imagine the market as a journey. Every candle is one step. Every high shows where buyers pushed price. Every low shows where sellers fought back. When we connect these highs and lows, the direction becomes clearer. We can see whether buyers are in control, whether sellers are taking over, or whether the market is simply trapped between two levels. This is called market structure. Market structure helps us identify the trend, recognize important changes early, and avoid trading against the dominant direction. Before asking where to enter, first ask one question: who is controlling the market right now? Because once you understand the structure, price is no longer random. It becomes a story you can read. Before we continue, I want to share something genuinely interesting with you. My team recently showed me a report explaining how many regular viewers of this channel are actually subscribed. And surprisingly, many of you who watch our videos regularly still haven't subscribed. Some viewers have even told us that YouTube occasionally unsubscribed them without them realizing it. So I have one small favor to ask. Please take a moment right now and check whether the subscribe button is active. If you regularly watch our trading lessons, if you find value in the strategies, explanations, and educational content we provide, simply press subscribe. We are approaching an important milestone for this trading community, and subscribing is one completely free action that can help us continue improving this channel, week after week, month after month, and year after year. It helps us create better lessons, clearer market explanations, stronger educational materials, and more valuable trading content for you. That is the only thing I will ask from you. Do we have a deal? And here is my promise in return. Every week and every month, we will work harder, study deeper, and continue bringing you the trading knowledge, market insights, and practical lessons that can help you grow. I have stayed committed to that promise from the beginning, and I will not let this community down. Please check the subscribe button. Your support truly means a lot to us. Now, let's continue with the lesson. Now, let's simplify market structure, trend, breakup structure, and change of character. More importantly, how do we combine all of them to identify the direction of the market? Before taking any trade, your first task is to identify the current momentum. Let's say the market is currently bearish. How do we know? Because price is creating lower lows and lower highs. Start by connecting the most important lower highs together. Then, wait and observe how price reacts when it reaches that trend line or structural level. As long as price remains below the latest swing high, the bearish structure is still valid. But when price closes strongly above that swing high, the structure begins to change. That upward break is our first important signal. However, not every break is a valid break of structure. Some breaks are simply liquidity grabs or false breakouts. Others are strong, high-probability structural breaks. So, how can we identify the difference? Imagine that the previous swing range was approximately 460 pips. A weak break may move slightly above the swing high and immediately return inside the previous range. That could simply be a liquidity sweep. But when price closes with strong displacement, and the breakout candle moves beyond approximately 50% of the previous swing range, the probability of a genuine structural shift becomes much higher. This tells us that price may be leaving the previous trading zone and moving into a new zone. When price returns to retest the broken structure, we may begin looking for a high-probability continuation opportunity. At this stage, we are not discussing exact entries. We are focusing only on understanding market structure. However, on the lower time frame, traders may look for additional confirmation, such as an engulfing candle, a strong rejection, or a favorable risk-to-reward setup. Now let's understand the difference between change of character and break of structure. Imagine that the market has been bearish. It has been producing lower highs and lower lows. Then, for the first time, price closes above an important lower high. Because this is the first bullish structural break following a bearish trend, we call it a change of character. CHoCH. The change of character is the first warning that the previous bearish momentum may be weakening. It does not always confirm a complete reversal, but it tells us that something important has changed. After the change of character, price may create a new swing low, move upward, and close above the next major swing high. That second bullish break is called a break of structure, BOS. So remember, the first break against the previous trend is the change of character. The following breaks that confirm the new direction are breaks of structure: change of character, retest, break of structure, retest, another break of structure. This sequence shows that the market is gradually building a new bullish structure. Price begins creating higher highs and higher lows. The same logic works in the opposite direction. Imagine that the market is bullish. Price is producing higher highs and higher lows. You can connect the important higher lows to visualize the bullish trend. If price breaks below an important higher low for the first time, that is a bearish change of character. It is the first indication that bullish momentum may be weakening. If price then creates a lower high and closes below the next major swing low, that becomes a bearish break of structure. Now the probability of continued bearish movement becomes stronger. To correctly identify internal and external structure, always ask one important question. Where did this move begin? Whenever you identify a major high, find the swing low from which that upward move started. Whenever you identify a major low, find the swing high from which that downward move started. Those origin points help you identify the true structural swings. Smaller movements inside those major swings are called internal structure. The larger highs and lows controlling the overall direction are called external structure. Do not label every small movement as a major structural break. Focus on meaningful swing points, strong candle closes, clear displacement, and the relationship between the current move and the previous range. So, the process is simple. First, identify the current momentum. Second, mark the important swing highs and swing lows. Third, connect the structural lower highs in a bearish trend or the structural higher lows in a bullish trend. Fourth, wait for a strong candle close beyond an important swing level. The first break against the existing trend is the change of character. The next confirmed break in the new direction is the break of structure. And finally, wait for the retest and observe whether price respects the new structure. That is how trend, market structure, BOS, and change of character work together. Read the structure, understand the momentum, and let the market confirm the direction. Before you go, support our trading community by liking this video, subscribing to the channel, and sharing your thoughts in the comments. Your engagement is the fuel that keeps this channel growing. It inspires us to create more valuable trading lessons, practical insights, and educational materials designed to help every member improve. So remember, like, subscribe, comment, and grow with the community.